November 2021's shares to buy now is for stock that has an eye for precision. So much so that they provide key metrology and major equipment used by dentistries, hospitals and GPs, which is crucial in any economy. They truly are market leaders at this within the UK. And so by now, you guys should know how these shares to buy today videos go. You know I'm not going to reveal it until you do me one little favor, and that's to smash the like button, guys. Share this video too, and subscribe with notification bell on as well. So back to the main video. If I told you guys I was actually considering keeping this stock to myself and not telling you about it, how would that make you feel? Okay, no need to get aggressive. The stock that's made my shares to buy now video in November 2021 is for a company called Renishaw with the ticker symbol RSW.L in the London Stock Exchange. And whilst they might have a high share price of roughly £52 per share, yeah, you can understand why just by looking at this. Since this stock has come to the London Stock Exchange, it has drastically risen. And so this automatically makes me think, could this high share price already be a bargain in the future to come? Well, a big part into answering that comes from looking at their income statement. So let's do just that now. And ladies and gentlemen, this is a solid income statement that you're seeing right here. I mean, yes, their revenue hasn't consistently increased, which is what you would want from an ideal income statement. But Renishaw already know this, and so what they're doing to compensate for it is they're clamping down on their total expenses, because this has decreased too. This isn't a coincidence, guys. And what allows them to do is boast of a comfortably high net profit margin of roughly 20%. Now, doubters could still argue what happened in 2020, but when you think about this being the peak of COVID, you start to see these results as more of an anomaly rather than a prerequisite in the year 2020. But to iron things out and get a clear definitive answer on this, let's see the balance sheet. Not surprised here as well, guys. This is a strong balance sheet that you're looking at. Their total short-term assets can cover all of their total liabilities, both the short-term ones and the long-term ones as well, guys, several times over too. And when you add the total long-term assets into the equation, the gap gets even bigger, guys. And at this point in time, I don't even care whether this stock has a goodwill or intangible assets section, because you guys know I don't rate this section at all. It allows companies to pull a wool over investors' eyes and make a balance sheet look a lot better than what it actually is. But at this point, their balance sheet is so strong, with or without this section, that it really doesn't matter. It becomes irrelevant actually. But what I am curious about is how this will affect the cash flow statement. And to be honest with you guys, I'm a little bit disappointed because it's not as good as I thought it would be. They've still got some work to do here. And it shows in their total operating activities too, because they started off well in 2018, but noticeably dropped and kind of stayed there for several years. It's only recently, in this year alone, that they've actually gotten back to where they were before that decline. And unfortunately, the cash flow from investing activities is all over the place. Yes, it is comfortably negative across the years, which shows that this company has a hunger to want to invest their money. That's always what you want to see as an investor. But there's no consistent growth in its negativity, which then leaves you with big question marks. And the cash flow from financing activities is like a carbon copy of the investing activities too. Although you can argue it's even worse because it's going down at such an alarming rate. When in actuality, what you want it to do is the reverse. You want it to get more and more negative, which is clearly not doing. As a result, I think you guys can see why Renishaw has made my shares to buy now video in November 2021. I want you guys to remember that the stocks I've made my shares to buy now videos each and every month, you can use them as a template. You can choose to follow that template, or you can choose to find another stock and compare it to that template. It sets a standard for you guys to expect from the stocks you invest in. Or another way to view it is it's kind of like a compass that points you in the right direction to go in. You still have to get to that destination though. It's up to you guys to determine whether the research you've done is adequate enough to take you up to that successful destination. And with that said, I want to know what your thoughts are on Renishaw stock. Tell me all about it down in the comment box below. And whilst you're there, don't forget to like this video, share it too, and subscribe with notification bell on as well. It's your favourite YouTuber, DS11 Finance, sharing my thoughts, my experiences with you guys every Sunday at 3 PM. Have a great day, people. Bye.